And good morning, good evening, good afternoon, students and traders. This is Mike, the FX boss, not your boss. Not yet, not your boss, not yet. Alright, everybody, welcome to the Professional Forex Trading Course 101. Never forget, trading is a learnable skill when you learn in the correct way. So, when you learn, not if you learn, but when you learn in the correct way. And never forget, what is the goal? The goal is to bring you from zero to a millionaire trader in 3 years, right? Not in 1 week, not in 6 months, everybody. Talking about complete beginners, right? Complete beginners, not in 1 year, millionaire trader in what year? I mean, I would love to, right? We are in the same boat, but most likely it's never going to happen, but in about 3 years on average, this is the reasonable time, to grow into from zero, right, complete newbie to a professional trader, okay, right? Now, in an institutional way, as always, what does this mean? This means that you are first an analyst, how to become a professional trader in an institutional way. You are first an analyst, you're not a trader yet, and then you become a trader, you grow into one, right? So Forex Course 101, it's all about the market. It's called the learning phase. Here you're going to learn how to lose less, and then, Forex Course 202, it's the money phase, what tools institutions or institutional traders are using to make money. So it's the business, Number one, Forex Course 101, it's all about the market. Forex Course 202, it's all about the business. And I know I'm boring, I keep telling you this business is not what you think it is, right? I promise you this business is not what you think it is, but it's too soon, for you to trust me or to believe me, it's all right, it's all right. So we're going to spend 1 year, right, together, okay? Never forget, you're going to graduate from this course when, number one, you have your charts set up and ready for trading. Are you building your charts, everybody? Number two, have your strategy in place. You understand how you win, how you lose. Are you building your strategy? Do you have any strategies? Don't buy strategies. Don't copy strategies. It's not going to work for you. Alright, and number three, you have a complete understanding of how this market works, so you can analyze the market and make an educated prediction. Risk disclaimer, these streams are not trading or investment advice. We are here to learn. And for questions and homeworks, you have my Gmail, everybody. And for other extra webinars, seminars, we have Skype and Zoom too, fair enough. If you didn't receive the free manual, everybody, send me an email, alright? And if you want to get the free ebook, where is the ebook? Give me a second, everybody. So that's one. Give it a second. We're going to open another one. Give me a second. So Portuguese note, and there you go. All right, everybody. So if you want the free manual, send me an email. Okay, it's for free. It doesn't cost you a cent. But if you want the ebook, the free ebook with this beautiful guy, the little book of trading secrets, okay, please visit the website www.fxbossfx.com. all right, there is going to be a pop-up, right? It's going to pop up. You fill in your details, your name in your email, and you got the free ebook. And those are really some secrets, everybody. I don't believe about, well, let's see, let's see if there is something that might interest you. The mind traps, the psychological need to belong to a group, the need to always be right, creating false expectations. I'm going to be a millionaire in 1 year. I'm sorry to tell you, in 3 years, maybe, and number five, I need to make money. Those beliefs, those mind trips are complicating things, Anyway, everybody, one more time, welcome. So let's dive into today's lesson 19, okay? And today's lesson, it's called How to Make Money, Trading Support in a Downtrend, all right? So we're going to intimately discuss retracement trading and how a day trader would approach the market, all right? Now, without further ado, let's go to the chart and give me a second. So, and don't worry, this is JForex charting software. It's also a platform. You can use TradingView, it's not a problem. So in the previous lesson we talked about how to make money, how to trade past support, right? And we've learned from the previous lessons that the market, in order to move, it must wave, remember? The market must wave, it goes extension, retracement, extension. And when the market starts to change in the short-term trend direction, something like this, then we identified support, resistance, pivot points, that those are areas that we can predict to a degree. This is where the market most likely is going to, most likely, it's a probability game, the market most likely is going to reverse, right? This is, so strategy rule, if you want, okay, I am going to buy, right? So far, strategy rule, if you want, there is no right or wrong, I am going to buy at past support. You know, we didn't learn candlesticks yet. I'm going to buy with past support, with a counter trend line break, bullish candlestick formation. It's coming. We didn't learn yet. So, but I'm going to buy here when the market makes a higher high, or I'm going to buy once the market confirms two lows, two highs. When the second high it's a higher high, when the second low it's a higher low. Does this make sense? It could be a strategy rule. There is no right or wrong. You need to build your strategy. Okay, so I'm going to buy this market at the counter trend line break at past support. You know, we are in the second module from the manual. It's called timing and retracement trading. And also I'm going to buy when I'm going to see a confirmed change in the short-term trend. Okay, does this make sense to you? If you buy where so this is the advanced course issue that I'm going to tell you. 95% of my students, traders like you, when they come to the advanced institutional trader program, they have issues. Me too, back in time, all right? Me too, we're all the same. So we have issues with timing. What does this mean? The market is going to be down in here. The market didn't reverse yet, and I'm going to buy. All right, everybody. So this would be, because if we don't see the future, right? If the market is in here and I'm going to buy just because it is at past support, I am speculating. You are speculating. Does this make sense? No, I'm not. Yes, you are. How do you know that this market is going to go up? It's at past support. What about the short-term downtrend? How do you know that the market isn't going to push further down? Agreed? Agreed? You are speculating. We are speculating. Agreed? Even if the market makes the counter trend line break, but it's a lower low still, and you buy, it's a fair enough, it's a bigger probability, greater probability, because you have two divergences, you know, two convergences, sorry, not divergent, but convergences, you know, that are showing you, all right, you know, past support, fair enough, and counter trend line break, but still, you know, you are in a downtrend. Does this make sense? So to have a better probability of success, wait for the short-term trend to change. I guarantee you, you have the recording, you can call me out, I guarantee you, if you can apply this technique in terms of understanding that, try to enter when you see the change in the short-term trend. You must learn relevant highs and lows too, but if you can wait, it doesn't matter, day trader, you know, swing trader, if you can wait for the market to change the short-term trend, I guarantee you, you are going to start to lose less. What about making money? You need to learn how to lose less first. Alright, so this is just a quick recap. Now, how a day trader approaches the market, right? we have a downtrend. All right, we have a downtrend, and on charting the downtrend, you are going to have the highs are going to be support. Let's make it green. Let's make it green and bigger. Maybe like this. Okay, and here you have support. All right, and the lows in a downtrend, and the lows are going to be defined as past resistance, right? Agreed? Past resistance, past resistance. Okay, now just an example. We've learned about the confirmation time frame, and we've learned about the trading time frame, right? So just an example, if this is the yellow equals to 4 hour time frame. Okay, now of course when the market's making lower lows, lower highs on the 4 hour time frame, you are not going to see the short-term trend. Agreed? Not as micromanaging. So how a day trader working on a 15-minute chart example would approach this market? And it goes like this. Let's say that the market starts to make higher highs, higher lows, higher highs. All right, the short-term trend, all right, the short-term trend is going to be visible on the 15-minute chart and or 30-minute chart. So STT, short-term trend, visible first. If you're talking about trends, not market wave, but trends, visible first on 15-minute / 30-minute. Okay, now a day trader, it depends on the strategy, fair enough. A day trader is going to take advantage. All right, he's going to enter here if he's aggressive. Give me a second. Now we need to do it like this and like this and like this. Give me a second. Okay, so the day trader working on the 5-minute chart, 50-minute chart, whatever might be the case, all right, he's going to take advantage of this retracement until up to here. Agreed? Okay, now depending on how big is the distance, the day trader can enter buying the retracement up in here, I mean down in here, down in here, all right, and a day trader would not enter anymore up in here. Okay, I need you to learn that retracement trading, the 4-hour chart with the 30-minute chart, is just an example. You need to understand the concept. So talking about retracement trading, money was made from here to here, right? Money was made from when the short-term trend on the smaller time frame changed, all right, and this is where the money was made. So you as a trader, you should this is all knowledge, all right? Many times I'm on the 15-minute chart or 1-hour chart, you know, this could be the yellow, the big one could be the daily, you know, not just the 4-hour. So I could be on the 1-hour chart buying an uptrend. I could be on the 1-hour chart buying an uptrend. I could be on the 15-minute chart buying an uptrend, but those uptrends are retracements on the higher time frame. Boss, can you repeat please? Yes, sir. Many times we are buying uptrends on the 1-hour chart, 2-hour chart, 15-minute chart, whatever, the blue, you know, but those uptrends are nothing more than retracements from the higher time frame. You could be buying the 4-hour uptrend, but if the daily or the weekly is going down, this is then the retracement on the higher time frame. You could be buying the 15-minute chart, it's a retracement on the 4-hour chart, alright? So money is being made from down to here to up to here, alright? Now, if you can understand this and just apply this technique that it's not suitable, remember this is not trading or investment advice, but it makes total sense if you ask me, you know, it's common sense. It's not advisable to enter the last counter trend line break. You are 20 pips in front of the past resistance area that you can see it, you know, and you are entering in here. So this is going to be 80% to 90%, you know, a losing trade. Does this make sense? Why is that? What do you think? Why is that? Doesn't happen always, it happens 80% of the time. This is where I came along and I'm telling you good news. Trading is a learnable skill, right? Why? Because the stronger pattern says, all right, we're at past resistance. So because we're at past resistance, then we're going to continue the pattern, okay? And statistically speaking, 7 times out of 10, this market is going to reverse and go back down, all right? And when I'm saying statistically speaking, we're talking about the daily chart, you know? On the daily chart, 7 times out of 10, if the market is going to continue the trend, if the market is going to continue the down market wave, is going to reverse at past resistance. That's not a rule, that's a concept, all right? So if you are here because you are late to the party, and me too, and you are entering because I need to make money, you know, this is a risky trade from the risk-reward standpoint. Does this make sense? Would you agree? So if I am entering in here somewhere, right, and the stop loss must go on the previous low because I'm trading a pattern, any other stop loss at that level of the course, you know, it's wrong because we didn't learn anything else yet. So stop loss goes on the previous low of the uptrend, and even if I want to make 1 per 1, you know, which is not good, you know, it's not enough unless you have a great winning ratio, 70% plus, you know, then do we agree that this is a risky trade in terms of risk reward ratio? And if I go 1 per 2, you know, see what the market must do to give me 1 per 2 profit. It must break the past resistance level, but the market is down. Agreed? Now, when do past support come into play? Once, you might write this down, once the market hits past resistance, looking at past support, then the market enters at what it's called the no trade zone. Okay, it's called the no trade zone. Boss, what is the no trade zone? The no trade zone is the zone of maximum risk where bulls and bears are fighting for control. The bulls are smacking the bears, the bears are smacking the bulls, you know. Looks like WrestleMania, you know, if you live in the United States, you know, so they're wrestling and spanking each other. So this is the zone, the area of maximum risk. Why maximum risk? Because anything can happen. Okay, so that's called the no trade zone. No trade zone. Okay, now 80% of you or you are not going to listen to me. Then you are going to enter and trade in the no trade zone. Don't do this. Now moving forward the conversation. So quick recap. A day trader is going to take advantage. If this is the 4-hour downtrend, the day trader is going to take advantage of this movement in here on the 5-minute chart, 10-minute chart, 15-minute chart, maybe 30-minute knots, you know. Alright, and money it's been made, talking about a retracement trade. Money it's been made from here to here. Oh yes, but period, end of story. Okay, period, end of story. Try to be humble, try to learn. Alright? Oh, but I can disagree. You can disagree, but no money for you, you know, because I mean this is common sense, right? Just look at the chart, it's common sense. You know? The market was in a retracement, fair enough, it had passed resistance. Why would you, for God's sakes, why would you enter up in here? You know? And if you need to enter, which I'm telling you not to, at least risk less. But you are not going to risk less. Guess why not? Because you're going to think, oh, but if I'm risk 0.25%, I'm not going to make any money. You know, more in the advanced course about the money problem, man, I mean, the business side of trading, how money is produced. The money problem is a big one, you know, it's a psychological obstacle. Still doable, you know, but you need to learn. There is a lot to learn in here too, right? Okay, so everybody, it's a no trade zone, so this is the zone of maximum risk. You know that anything and everything can happen, all right? Now, let's go step by step. 7 times out of 10. Let me show you how to lose less. And let me clarify to you maybe why are you losing. And I have a bad news too. What's the bad news? Starting from today, those losers that I'm going to show, those losers are not acceptable for you anymore. Does this make sense? Why not? Because you've learned. If you've learned what I'm telling you, then you're going to have less losers, right? So, have less losers, number 1. Don't enter near past resistance. That's one. Okay. Now, very slowly, you know, nothing special. So, 7 times out of 10, if the market is going to continue the down market trend, you know, then sooner or later, then the market is going to start to show 2 lower lows, 2 lower highs, you know, and then you enter and you short the market. Agreed? Okay, now let me be very straightforward with you. Boss, can I enter if the market makes 2 lower lows and 2 lower highs inside the no trade zone? No, you should not. Alright? Oh, but it's making lower lows or highs. It's still in the no trade zone. Alright? You are not there yet. Let's go step by step. You need to build your knowledge step by step. Alright? You cannot jump forward classes. Make sense? You cannot jump from 1st grade to 8th grade. Make sense? You would believe, oh, I've learned. You are not learning. Okay? So can I enter 2 lower lows, 2 lower highs? Can I short the market at the no trade zone? No, you should not. Okay? Or if you are not going to listen to me, enter with less risk, alright? And then build a position if you need to. Now, how to lose less, example number 2. 3 times out of 10, the bulls are going to win and the market is going to get out of the no trade zone with the market making a higher high compared to the relevant previous high. Boss, can you repeat please? Absolutely yes. 7 times out of 10, when the short-term trend needs to go into a retracement mode on the market wave, right? the price action, the market is going to break the relevant high. So the circle on the yellow is the relevant high of the downtrend. The circle on the blue, it's the higher high on the, whoops, so the blue circle, yeah, I need to do differently. So that's the blue. So the market is the price action is going to make a higher high and is going to break this high. Can you see it? So question number one, are we still in a downtrend if the market did break the relevant high on the left? No, we are not. See, you are learning, very good. And yeah, we agree this is nothing special, right? Now, if we are not in a downtrend anymore, what are we? Boss, we're in an uptrend. And here is where it takes some time for you to learn and understand, all right? Now, if you are looking at the video, pause the video. If you need to, go back on the video, study the charts, whatever might be the case. If you are watching this live, then you need to wait until the end of the session, all right? So, the market made a higher high compared to this high, all right? Now, very slowly, when the market was here, when the market was making higher highs, higher lows, higher highs, higher lows, and before the market broke the high, what was this called again? A retracement. Very good. But then the market entered into the no trade zone and broke the relevant high, circle on the left on the yellow, right? So is this blue price action still a retracement? Gosh, this is a difficult question, I don't know. I would say yes. I would say no, or I don't know, right? So one more time. Now that the market broke the relevant high, this blue, okay, this becomes the first up extension leg. Does this make sense? This blue becomes the first up extension leg. All right? Why the first up extension leg? Well, because it broke the yellow, right? That's the logic behind. So this blue retracement, this blue price action, now that broke the relevant high on the yellow down shortened trend, now this becomes the new first up extension leg. All right? Now, guess what you and me 20 years ago, guess what you are going to do up in here? What are you in 90? Okay, let me shoot a number. What you and me too 20 years ago, what you and 99% of retail traders, it's all about knowledge. I'm not judging anybody, are going to do up in here. The market is going to go up, and then some of you are going to say, oh, it's a breakout, oh, it's an uptrend, oh, it's this and this and that. And you are going to see the market retracing to pass support on the blue near the uptrend line. Maybe you might be waiting for the counter trend line break on the blue, and here you are going to buy, right? Or some of you are going to wait for another hard high, and up in here you are going to buy, right? Please don't get offended, okay? I'm trying to teach you in here, right? Now, guess what happens when you buy? What happens when you buy, right? As soon as not me, but as soon as you buy, the market is going to go into a retracement. And because you were trading the blue price action, the blue short-term trend, you are going to be stopped out. True or not true? Okay. Now, is this something special in the sense, oh, you know, I was stopped out? Those losers are not acceptable anymore. Why not? Because you were entering at the first extension leg. Does this make sense? And many times this level up in here, if you go on the higher time frame, you know, so if I'm on the 4-hour chart and playing around with the 15-minute chart, many times there is going to be a pivot point or resistance area from the daily. Does this make sense? Do you understand now why multiple time frames as an analyst is so important to understand and to chart and to study and to monitor? All right, because up in here, you as a good analyst first, you should tell to your trader, John or Jane, wait for a retracement. You know, wait for a retracement because we're at past resistance. Maybe my picture is in between. We're at past resistance from the daily, or we're at the pivot point at the daily. So wait for a retracement, or if you want to buy, because those are areas, if you want to buy the next 20 pips, 50 pips, whatever, risk less, okay? Because the market 7 times out of 10 is going to reverse, is going to retrace. Does this make sense? The market, in order to wave, it must go extension, retracement, extension, retracement. Okay? So in conclusion for today, homework. Check your losers. Okay? Homework, HW. Check your losers and try to find out if you entered at the end of extension. That's the homework. Check your losers and try to find out if you entered at the end of extension. Check those ones. Make sense? Check if you've seen a higher high and your brain picked out the information. Oh, it's a higher high. Oh, we are not moving down anymore. We're going up. Oh, it's a breakout trade. And but when you entered, the market reversed. Okay? It's good. This is not bad news. This is good news. Because the losers make sense. Does this make sense? For me to make money, I need to lose less first. I need to understand how this market works. That's one. Easy to understand. It takes some time to spatially see it on the chart, fair enough. But this is one that I can see, all right. Now the market broke, it made a higher high. Now Mike told me, you know, that, oh, this market is going to retrace. So if I need to buy up in here because it's still going up, making higher highs, higher lows on the 15-minute chart, I'm going to enter, but I'm going to risk less. But if I can see on the daily pivot point, past resistance, whatever, or don't enter or risk less, does this make sense? If you do this and if you lose, I'm going to call in the office. John or Jane, why did you do that? Oh, boss, the market went up. What about past resistance or a pivot point on the daily? What about the market made a new higher high? What about the market made the first up extension leg, and after the extension, a retracement must come? Does this make sense? Even if you trade the first up extension leg, right, that is down in here, it's still a risky trade. The stop loss down here, it's still a risky trade. Why? Because you have no higher low yet from the up extension leg. Does this make sense? You have no higher low yet. So basically you are buying, we've learned lesson number 2. Basically what you're doing here, you are buying a 50% confirmed uptrend. Your probability, if you are buying the green and put the stop loss down in here, stop loss is in the right place, I give you that, but you are buying a 50% confirmed uptrend. How is this probability wise for you? 50%? I want the Lambo or a Ferrari. Never. It's what you're doing, it's random. Make sense, everybody? Does this make sense to you? It's random. What does this mean? It's subject to luck. Okay? You need to build your knowledge based on understanding of how this market works and what makes the probabilities higher. Does this make sense? So retail traders without the appropriate knowledge, they are going to think, oh, it's a hard high. It is. Oh, it's a breakout. It is. But it's also the first up extension leg. And the market cannot move. Otherwise, it must retrace. Okay? Do the homework. I'm looking for traders. It's not a joke. Okay, I'm looking for traders. I'm partnering with 2 companies, and I'm going to do a class or a video, I don't know, and talking about why I'm partnering with Darling Zero and Morris Capital Australia, which is trading.com. all right? I'm looking for traders, you know, do the homeworks, try to grow up, okay? Send me emails or Skype, all right? Send me emails, oh, Mike, I don't agree with you. We love those emails. You know, questioning the concepts, okay? Think if you need to think. I mean, think, right? Okay, do those homeworks and see you in the next lesson. Okay, everybody, so see you next time. Thank you very much. Do the homeworks. See you in the next lesson. Hopefully, I'm going to see maybe tomorrow, if not any other day, all right? Thank you very much. See you next time. This is Mike, and bye-bye.